One of the most powerful tools in planning financial operations is a budget. It helps owners determine if they have enough money to fund operations, expand, and generate income. Without a budget, a company runs the risk of spending money they don't have, not spending enough to compete, or failing to build a solid emergency fund. Budgets are basically structured financial plans. Given the limited resources of small businesses, budgeting requires critical attention and planning. Small business budgeting can help you make informed decisions and also track performance and achieve business objectives and goals. Here are 4 commonly used budgets. The first one is the operating budget. The operating budget is a statement of estimated income and expenses over a specified period of time. The cash budget is a statement of estimated cash receipts and expenditures over a specified period of time. Capital budget is the plan for expenditures on assets with returns expected to last beyond 1 year. And your cash flow budget, which provides an overview of the cash inflows and outflows during the period. By pinpointing cash problems in advance, managers can make the necessary financial adjustments and changes. Next, we're going to talk a little bit about the general ledger. The general ledger summarizes all of the financial information you have about your business. It lists every accounting transaction for you. This will be anything of economic impact on your business. Basically, the general ledger is a means for keeping records of the company's total financial accounts. It's basically the report card of the business. Accounts typically recorded in the general ledger include assets, liabilities, equity, revenue, and expenses. Note that order: assets, liabilities, equity, revenue, expenses. This is also the same order of the chart of accounts utilized in the general ledger. The different types of general ledger accounts. The money your business earns and spends is organized into subsidiary accounts. These are known as sub-ledgers of the general ledger. The sub-ledgers are like notebooks to use to write down business transactions as they happen, whereas the general ledger is the master notebook where it gives you a summary of all of that information. The common sub-ledgers you will see: accounts receivable, which will show the money owed to the business. This is an asset account. Accounts payable, which shows the money your business owes to someone else, which is a liability account. Cash, which shows the liquidity of your company, being the most important account. And inventory, which reflects the sale and purchases of inventory coming in and going out, in which this is an asset account as well. Your general ledger should be in conformity with your chart of accounts and list the exact same account names and purposes. So how is this relevant to financial statements? As financial statements help you track your business financial performances and cash flow, the data is compiled from the general ledger. The general ledger matters because the financial statements matter. If your general ledger isn't correct or has accounts misplaced or miscategorized, then it will reflect in your financial statements by having some of the information then incorrect and miscategorized. So you want to make sure that your general ledger is correct before you file your taxes or issue a 1099 to subcontractors. The general ledger is also where you see every journal entry ever made. Rather searching around for informations, combing through your bank statements, credit card statements, looking up invoices, and all of those other things, the general ledger allows you to see all of the information in one place. So you want to have your accounting records in one place so that they can be effectively used for decision-making purposes. Also, it allows you to manage your day-to-day transactions and stay on top of possible accounting errors. We hear a lot in accounting the term balance the books. And the balancing of the books is just about maintaining the financial health of your organization and looking at your total debit balance as it equals your total credit balances. So when you set up your general ledger, you must decide whether you are going to utilize the double entry method of accounting or the single entry method. The single entry method is for small, simple businesses that do not have a lot of monthly transactions. If you are looking to be in conformity with GAAP, you are going to use the double entry accounting process, which means for every debit, there will be a credit. Also, you are going to utilize various codes for your general ledger. These codes are assigned to each transaction to make searching for those transactions in the ledger much easier. And so the codes are often based off of your chart of accounts in setting up your sub-ledgers. So for example, asset accounts will start with a 1 or 100 series. Liabilities will be 200. Equity, 300. Revenue, 400. And lastly, expenses will be a 500 series. So there is a lot of different ways that you can view your general ledger and keep up to date depending on what type of business you have. If you're a smaller business and you choose not to use QuickBooks, that's fine. You want to keep your general ledger in Excel. However, if you're using QuickBooks, it should be relatively simple to view your general ledger in any given time frame. Ultimately, it's important to recognize that your GL is a very intricate part of preparing your financial statements. Without a properly set general ledger, your financial statements may run into issues of being overstated or understated or misrepresented. So make sure you gain an understanding of your general ledger. As a small business owner, one of the most important tasks you need to do when it comes to your taxes is organize your financial information. Keeping your records organized can help you save time, reduce stress, and avoid costly mistakes. So why is organizing financial documents so important? Of course, there are several reasons. And the first is to help you keep an accurate account of your expenses and income. And this will be essential for your tax preparer. Following are just some tips in keeping your small business documents organized for tax time. The first tip is to keep your business and personal finances separate. One of the most common mistakes small business owners make is mixing personal and business finances. Doing so can make it challenging to determine which expenses are tax deductible and which expenses are for personal use. So one thing you want to do is keep a separate bank account and separate credit card for your business and only utilize them for business-related expenses and transactions. Keep receipts and invoices in one place. What's really great about technology are all of these wonderful cloud-based document storage solutions. You can store all of your documents in one place. You can place your invoices there and include any backup information for that invoice in the same location. You also can take snapshots of your receipts and have them stored on the file so they can easily be found. You also want to have a conversation with your accountant. And in that conversation, find out exactly what documentation that person needs. What is going to help your accountant navigate through the tax process and ensure that the tax returns are filed correctly. So if there is specific information that's necessary, you want to be aware of it ahead of time. So with that, get your documents in order. Identification information. Your accountant will need personal information to file taxes on behalf of your small business. So the information you may need to provide is your Social Security number and or your employer identification number. For the best tax preparation process, you may also want to bring a copy of your last year's return, especially if you have a new accountant and that particular person needs to become familiar with the financial health of your business. The tax return will also inform your accountant of tax deductions that you have taken in the past and that you may qualify for in the year to come. Bring your financial statements. The financial statements will communicate the financial health of your business. So the essential ones for you to bring will be the balance sheet, your income statement or profit and loss statement, and your statement of cash flow. This will serve as the formal record of all the financial activity in your business during the tax period to make sure it is accurately reflected in your tax return. Fill out the relevant tax form and bring any capital asset activity that you have. So this would be assets that benefits your business for more than 1 year, such as land, equipment, building, vehicles, copyrights, patents, and trademarks. You also want to bring business loan information. So you want to bring your business loan invoice, any funding receipts that you have, accrued interest payments, and PPP loan information as well. Have your income records. This may include bank statements, deposit slips, and/or sales invoices. Also, your expense records, receipts, bills, and credit card statements. And let your tax preparer know of any potential deductions that you qualify for. If you have home office expenses, business vehicle, mile logs, business travel expenses, charitable donations and contributions, health insurance, marketing materials, utilities, and legal fees. Payroll information. Your payroll data should be available for any pertinent employee, and this would be W-2 employees as well as 1099 employees. Make sure you have your inventory information and investment information, as well as mortgage interest and property tax information. And so this here is just a quick overview of some of the information your accountant may need in order to prepare your tax returns. Also keep in mind, relevant tax returns depends on what type of business you have. So if you are a sole proprietor or a single member LLC, the tax form that you will utilize will be the 1040 with a Schedule C. An LLC would be the Schedule C, corporations, the 1120, S corporations, the 1120S, and Schedule K1, and self-employment individuals, the 1040 ES. You really want to make sure that you have a conversation with your tax preparer to make sure that you have the right information available to be effective in getting your tax returns filed in a timely manner. And if you have a bookkeeper, make sure your bookkeeper is in communications with your tax preparer to ensure that information is reported in the most effective manner. And also, your bookkeeper can help you in having all of the necessary documents available in a timely fashion for your tax preparer. And so, this is just some of the important documents to keep in mind as you begin thinking of tax time.